Yeah, so the majority of the trade happened from 9:30 all the way till about 10:10, 10:20. So $1,700, not bad for about 40 minutes of work. I almost became a part-time trader this summer. I took a small break from my multipreneur lifestyle and traveled to Europe, spent time with my family and friends, and even hosted a 1 million subscribers celebration event. However, as a trading addict, I couldn't pull myself fully away from the market even when I was on break. The beauty of trading is that I was able to trade only the first 1 hour after market open, and I could call it a day before 11 o'clock market time. So in this video, I'm sharing with you guys the highly requested live trading commentary and the scalp trading strategy I use to trade part-time. This trading strategy is especially useful for part-time traders who can only trade the opening hour due to a full-time job or other life commitments. I've made so many videos on realistic trading strategies like this. If you guys appreciate the video, make sure to smash the like button and comment Lamborghini money down below. Okay, so the first scalping strategy we're going to be talking about actually starts taking place pre-market. I know there's a lot of part-time traders here who want to trade pre-market or within the first 30 minutes of the open and be done for the day. If that's you, then this is the perfect strategy for you to watch. Okay, so you can see on this particular day, AMSC gapped up from like $11 prior day's close to all the way pre-market to $24, $25. Now that's super early in the morning at around like 5 a.m. market time, and then since then you just slowly faded back down. And by the time I saw it around 7 o'clock, 7:30 market time, it was trading all the way down here. You can see that it faded all the way down to 21, breaks down $20 to around $17. That's the time I saw it. And the reason for this particular gap up is that it had earnings news. Like if you look at Finviz, which is a free news resource, you can see on this particular day, they had earnings, earnings beat and the stock gapped up overnight. But if you've been following my channel for a while, then you would know that I've been saying earnings report, whether it's a miss or a beat, does not matter to small cap stocks. So, what kind of stock is this? AMSC. This Finviz, once again, market cap, 247 million market cap. So that's definitely a small cap stock. And you can see the float is around 29 million shares float. So it's not a low float stock. So that will be safe to trade on the short side. Yeah, there's just something about these small cap earnings with the gap up. They are not like the large cap stocks that can keep on going or hold the gap. A lot of small caps, gap up from the earnings news and just fade into the open and spike it a little bit and sell off. And that's the reason I was looking for a scalp short on this particular trade. Okay, now that we have identified the strategy we want to trade it, as well as our bias, which is on the short side, we need some specific criteria about the strategy so we can define it and repeat it over and over again the next time we see this sort of setup. Here's a particular criteria for this pre-market gap up scalp short strategy. Number one, you want to see an extended daily chart on this particular stock. Number two, it needs to be a small cap stock, and that's not a low float, okay? Very specific here. This would not work for large cap stocks or for small cap stock that's a low float or a micro float. And number three, you want to see the stock start making lower lows and lower highs, essentially downtrending and break down pre-market. Now let me go to the details over here. So remember the first criteria, extended daily chart. You can see the stock had been kind of consolidating in higher lows on the daily over that 200 SMA you see over here. This orange line. So the stock definitely did break out to 7s, pull back to 6s, and had a decent climb up. And all the way leading into the breakout, it was trading around $10. Now, when the stock is trading at $10 prior to its close, like we talked about earlier, the next day it gapped up all the way to $25. We're talking about a 150% gainer overnight. So yeah, just from the technical standpoint, the chart was definitely getting extended. So that's how you get to the first criterion. Now the second criterion, like we said, it needs to be a small cap stock that's not a low float. Remember, this scalp short strategy may work for large caps, but the probability is probably only 50-50. Now, as for the low float stocks have a tendency to trap short sellers and get the longs piled up pre-market. So it's even more unpredictable. So that's the reason why I saw that AMSC, the float is 29 million. It's not a low float. A stock will only be considered low float if it had a share count under 5 million shares float. And anything under 2 million will be a micro float. So those ones are the truly volatile and unpredictable ones. But in terms of the strategy we're learning today, just remember, you don't want to be using this on low float stocks. Now, last but not least, the criterion of lower highs and lower lows pre-market would look something like this. You can see earlier we said this thing gapped out all the way to $25. Lower lows means it breaks down to a low of $20.50 and then it broke down that little pre-market support over here. So you'll keep on breaking down all the support lines. You broke down the area and later on you also broke down that $29 range, right? So you can see a lot of breakdowns. So breakdowns, that's followed by lower highs as well. You can see all the little spikes pre-markets lower and lower. 2260s, 2140s, and then you have like small little spikes, 2010, and then you just keep on breaking down. Essentially, you want to see the downtrend already forming pre-market. And you can see by the time I saw it around 7:30, 8 o'clock, the stock had faded all the way down to $16. So that's how you know it's extremely weak. And just a pro tip over here, you don't want to see a stock maybe making such a big move pre-market, right? $11 to 25, so that's a 14-point jump pre-market, and unable to hold even 50% of that pre-market gain. So if we think about it, that 14-point gain pre-market, even with a retracement, this thing really should have held,
what's a MAC 25 minus 7?
It really should have held that $18 level. But you don't want to see the stock breaking below that 18. So if you have a retracement greater than 50%, a lot of times, not always, but a lot of times, that means the stock is extremely weak. So keep that in mind. That's a pro tip that I'm throwing at you over here. So now that we've gone through all the criteria for this particular scalping strategy, then you can kind of get an idea of why this will be perfect for any part-time traders who have to place a trade for like the first 30 or 40 minutes of the day and be done. You can see because the follow-through happens quite soon after the market opens. Now let's talk about execution of this particular strategy, and I'm going to do so on this live trading recording. Before we dive into a live trading execution, let me show you how I would plan to execute the entries and exits on this particular strategy. So we talked about earlier, pre-market, this thing had faded from 25 all the way down to $15. Now, ideally, whenever this happens, I want to see it at least pop to retest some of the resistance from pre-market. So if you recall earlier, there was a huge breakdown level around this $19 area. Before that, you had like a 2070s area. But, looking from the way it traded all the way down here pre-market, I want to see ideally it pops to test the $19 area and fade it down all the way down to, you can see like these little support here. Tiny pre-market support. So that will be one of the first price target. And over here from after hours levels over here, you can see after hours that little wick here, that around that 1350s area, low 13s, 1310s, that will be the next target, ideally speaking. If you're enjoying this kind of lesson so far, especially learning new strategies and technical analysis, please remember to drop a like at the bottom of the video and leave me any questions you may have. I'll do my best to answer you. Thank you very much. Now let's go back to the strategy. You can see this is about 1 minute after markets open. A lot of volume on this AMSC stock is trying to bounce from that $15 to 1670s. Testing that VWAP area. Ideally, that would be the case. You can see I have an order out here at around $19, trying to see if we're gonna hit it. If that's the case, that would be the ideal entry, like we had planned earlier. But you're soon gonna see we don't actually hit that order. But essentially, we're trying to wait for the bounce to short into. You don't wanna be chasing this thing at the open. You can see fast forward a little bit, we had a little spike on that AMSC, super little spike. I'm trying to get filled here at 1580s. My order out here at 19 still didn't fill because the spike was so weak. So I got in some at only 500 shares starter at 1580s, trying to see if we're gonna get another pop to 16, 17, or even $19. But spoilers, it's so weak that it doesn't bounce that high. You can see while I'm waiting for another entry to see if we get to add higher, you can see it's already faded down. That's the thing with a lot of these stocks that gapped up so big overnight. By the time the market's opened, this has already retraced more than 50% of the overnight gain. So a lot of times the fact that the stock is unable to bounce to $16 or $19 like we had planned originally, that is the confirmation you're looking for on this particular strategy. Right? It makes sense. It's already so weak from pre-market and sold off so much that there's no buyers. And at the open, this thing just kind of pop a little bit and slowly fade back down. You can see I tried to add a little bit at the breakdown, right? I never got to add higher. 1540s, now I have about 1,000 shares at 1560s average. So I'm adding slowly into this. It's proven to be extremely heavy. You can see not a lot of upticks on the stock. You can see these are 2-minute candles, and earlier I was using 5 minutes, but 2 minutes. But you can see these 2 minutes candles all red. All the prints going through on the timing sales shows that the stock is extremely heavy. We're breaking down to $15 now. So I'm in the money about 60 cents, holding from 1562 average. And we are breaking that little. You can see if you draw across this line, that $14.80, 1470s, the low of the day from pre-market. We are breaking that with an increasing volume on this breakdown over here. Remember, when you're looking at these technical breakouts or breakdowns, it's not just about the stock is crossing that level. It's about what's the volume in comparison to the previous consolidation area. So this is extremely high trading volume. We're talking about that 1.3 million shares traded within the first 5 minutes on the sell side. So you can see I just added a little bit more, another 1,000 shares at $15. So now my average is 2,000 shares short at 1521s. And I'm in the money for about 60 cents, 50, 60 cents. Nice little breakdown here, 1450s now. You can see the stock just keeps on selling off. As you probably already know from all of my YouTube videos, most of my strategies involve scalping, momentum, and shorting. All of those things will require a very fast broker platform. And I have an exciting promo from one of the premium brokers I personally use, Centerpoint Securities. If you're trading with over $30,000, you can use Centerpoint to day trade with 0 commissions for 60 days. And that's not all. You'll also get access to Dash the Pro for 1 month for free. That's the trading platform you see in all my videos. That's another $150 value for free. To get this offer with all the freebies I just mentioned, you can sign up to Centerpoint Securities down below. And now let's get back to the video. Fast forward a little bit, you can see the stock is trying to bounce and reclaim that $15 area. I'm trying to be patient. You can see the little bounces are like very, very weak. It's not like a strong reclaim bounce that you sometimes see on the real technical reversals. Stock is bouncing to 1570s now. This will actually be the ideal place to add. Fast forward a little bit more. You can see the stock is back around that $15, but it's having trouble holding that area. I did get a little bit distracted around this time. I was trying to trade Tupperware, another highly short squeezed meme stock at the same time. So I definitely got a little bit distracted. You can see now on the 5-minute chart, we are slowly breaking down that $15 again. I just added a little bit more at 1490s. So giving my average down to 1514. So really trying to hold for the big breakdown of that $15 here. And despite all these consolidation you're looking at around at $15, yes, when you're trading it, it feels like forever, but it's actually only been 10 minutes after the market's open. So keep that in mind, okay? So a little bit more time has passed by. You can see we're literally teetering around that $14.90, $15 area down here. With all my 4 different entries, I'm still holding the 2,500 shares short at 15.14. Now I'm really waiting for a flush, but a lot of times, the consolidation could take, a little bit longer for that flush. And right now it's about 20 minutes after the market's open. You can see it does look like it's slowly fading down, lower lows. They're trying to defend that 1490s area, but, they're slowly getting sold into. You can see for a second over here, it looks like they're trying to squeeze it from $15. Really defending that bottom around 1490s over here. Remember, at the same time, I was trading another stock on the top over here, Tupperware. So I think that's around the time I decided to cover some of the AMSC so I can truly focus on Tupperware. But you're gonna soon find out that's gonna be a mistake. Okay, you can see I'm trying to cover 500 shares at 1490s just to cover some, to free up some risk so I can totally concentrate on the trade above. You can see I'm covering another portion at $15. This time around, I definitely messed up. I covered way too much. You can see I'm covering 500 shares again at $15. So, definitely covered too much. All in all, from the 2 covers to more conservatively, I covered 1,000 shares out of 2,500 shares position. Yeah, I really wish I didn't do that. You can see, fast forward a little bit later, we are now finally breaking down 1440s, 1430s. This is what I was waiting for, but I sometimes do need to practice my patience more, and I agree. I was just really trying to concentrate on Tupperware. But as you can see, it's now breaking down to 1420s. I'm still holding the 1,500 shares short, 1510s average. Now I'm nicely in the money by about $1. I covered 1,000 shares of it too early. And I know I was really impatient, but if you look at that time, it's only been 13 minutes after the market's open. So 30 minutes to make, probably $1 per share, that's pretty good. And you can see we're still breaking down on this AMSC, 1410s. And let's see if we get to that 1340 or 1310s final price target. Remember, that's what we had planned earlier. We are now breaking down some more to 1340s. You can see I'm trying to cover a little bit at 1380s, I think. So I covered 500 shares, locking in $840 on this one particular trade. So we have 1,000 shares left. You can see once it flushed down to that 1340s area, there's some small support there, definitely. Nice. I think we saw 1350s. Over here, breaking down to new low of the day. 1340s now. Yeah, that was a nice flush down to 1330s. Lows of the day is 1331. So you can see the stock is trying to bounce now. You can see I have an order outstanding at over here 1382 with the remainder 800 shares. You can see it's starting to bounce, right? The stock had bounced really quickly from 1380s over to 1420s. So a lot of times that signals a reversal. You want to be careful. You don't want to outstay your welcome. So you can see I'm trying to just cover up now. Taking the 1430s ask, I think, and then just got out. So I covered up everything at 1430s. So closing up this trade, ending with $1,700. So it took about, right now it would be about 10:10. So it took about 40 minutes after the market's open. And as you can see, while we didn't get all the way down to 1310s, we did go to 1340s, 1350s, and the majority of my covers that you saw earlier happened around 1380s over here, and then over that to 14. So you definitely want to take the meat of the move with this scalp short strategy and be done for the day. Do not outstay your welcome and get grinded back up all the way to $17. So yeah, so the majority of the trade happened from 9:30 all the way till about 10:10, 10:20. So $1,700, not bad for about 40 minutes of work. Now the next trade we're going to talk about is also a scalping strategy, but it's on the other side now, on the long side, on the stock Tupperware. Basically the stock has dropped from, we're talking about, I think double digits from 2021, 2022, and this year has been absolutely disastrous for Tupperware. Stock facing bankruptcy and insolvency issues and has dropped from $4 all the way down to $1. And if you stay below $1 for too long, you're gonna get delisted. But anyways, the stock has recently gained a lot of momentum and a lot of interest on social media. You can see the volume has increased drastically from 80 cents, 70 cents to $1 to $2, 4, and 5. And the day in particular I'm trading is this day over here, when the stock had opened up from $5 and spiked to almost $6 and then sold off. And I traded this one on the long side. Spoilers, I did not execute well on the scalp long. You're gonna see what happens. It ended up being a loss. So whenever you have these kind of stocks that just goes parabolic on the daily chart and has so much social media interest, like the GameStop, the AMC, basically a lot of the short squeeze Wall Street bet stocks, a lot of times there's opportunity to make money from both the long side and the short side. Well, overall, if I'm talking about long term, I'm definitely more short biased, but intraday, if you're looking for a quick scalp at the open, I would usually prefer the long side if we're talking about a quick trade at the open for the part-time traders. So you can see this particular day, we gapped up from prior day's close 440 to 540s pre-market. Now, what I would like to do is, if I want to go long, I want to see the stock actually sell off a little bit, right? Sell off all the way to $5 or perhaps even lower for 80s. And if it does reclaim a key level, which in this case, I'm going to use the $5 over here. You can see that little dip here pre-market, dip to 5s, and then rally back up to 550s, and then at the open it pulled to that $5 level. So that's the reason that's going to be my key level to risk off if I'm taking the trade on the long side for a scalp. And remember, this doesn't work on just any stock that's breaking up. It has to be a multi-day runner that's being heavily short squeezed. So the strategy is very simple. Look for multi-day runner, look for breakout on the daily chart as well, and especially when it's highly short squeezed, high short interest, then look for a pullback at the open, reclaim a key level to go long. If you're a little bit lost, don't worry, I'm going to show you the executions right now on my live trading recording. Before we dive into the actual live trading on the Tupperware scalp long strategy, I am a little bit embarrassed because you're going to see in just a second that I did really good on an entry, and I'm going to show you how you can get this perfect entry using key levels. But where I failed is the take profit. So that part, I'm definitely really embarrassed about it. So keep that in mind. And if you haven't hit the like button, please remember to do so. That's the best way to support this channel and tell me that you want to see more content like this. So this is about 5 minutes after market open. You can see on the top chart over here, Tupperware, the pre-market rally up that we saw earlier from like 460, 470 to 550s. You can see that line drawn over here intraday during my trading chart. This line is the key level, $5. So like I said earlier, I want to see the stock retrace to that key level after market open, ideally within the first 30 minutes of the day. So if you're looking to scalp the trade on the long side, you want to see a retracement to key level, right? So you want to see a breakdown. You can see this thing broke down to 480s and then bounced back up to that $5 level. So that's what got me interested. It broke down below key level and then reclaimed over that. Remember, you are looking at this $5 as a floor. You're not looking to catch a falling knife, thinking that it's going to bounce. Remember, nothing has to bounce. You're waiting for it to flush below $5 and then reclaim over that. Hopefully this makes sense, right? You're not trying to catch a falling knife. Watch for the confirmation, which is the reclaim over $5 key level. And then another thing that's important is that you want to see really high volume. The stock is already trading 20 million shares within the first 10 minutes of the day. So the volume is definitely really high. So you can see it's reclaiming that $5. That's why I put in 2,000 shares at $5. I'm trying to get in really quick to take a scalp on the long side. 2,000 shares, 501. I had a decent entry down here after the reclaim of the $5 key level. And you can see really quickly, it's already bouncing to 512s, testing that VWAP area, right? So we're already up 10 cents after, getting in a couple seconds earlier. So nice little 10 cents. You can see we're testing that VWAP. If you're looking to scalp, usually if you're conservative, I would sell into that VWAP breakout at 515. But, on this particular scalp trade, I was looking for a lot more. That's why I didn't sell into it. But if you're a part-time trader, if you're new, you're conservative, sell into the VWAP breakout. Take that 15 cents. On 2,000 shares, that will be $240. So you can see we're testing that 520s. I'm actually looking to add. You can see I'm prepping the orders, getting it ready over here. You can see we're squeezing a lot of volume. We're now over to 525. Got some sellers in the 530s over here. If you saw, flashing some big sellers. But we went through that really quick, actually. I added some more. Okay, I do not recommend this ad. This is definitely an aggressive ad. But on this particular trade, I was a little bit too confident that thinking it's going to $6 or higher. So that's more of an aggressive play. If you're conservative, take the entry below, closer to key level. You can see we're starting to hold up over here. Do you see? So a lot of times when you get these bids going through so fast, you're gonna get a skip up action. You can see they flash a couple of big sellers, but we're skipping through to 540s. That's how you know a couple of things over here. A lot of buyers bidding the stock up. Everyone's taking the ask and buying. And you also see short sellers. A lot of times you see the big orders going through on the ask side. Those are the short sellers trying to cover. That's how you get these skipping, squeeze action when the stock is almost gonna hold up. And it happens really quick. So you can see a lot of big orders going through. Yeah, shorts at this point is definitely in trouble. So that's how you get these kind of big squeeze action. It's when shorts have to pile on, they take whatever they can, bid, ask, 20 cents over ask to get out of their short position. So short sellers are piling in to get out of the trade. They have to buy to cover, causing the stock to squeeze up even higher. Now, this frame right here, this is where I made this critical mistake. Knowing that I had a really bad entry over here. Remember, I had 2,000 shares at $5 and added 1,200, giving my average of 513. My average isn't that good anymore. Okay, 513 average compared to $5. It's not as good, right? And that's fine if you're on the right side of the trade. But the problem was I didn't sell into this breakout. So now I'm holding 3,200 shares at 513, and there's a resistance up here, right? You can see this pre-market high area, 550, 560s. So we're approaching that resistance. So you should always at least sell some partial positions into resistance. But I didn't. You can see I'm just holding this. I'm not selling, which it's the mistake over here. Remember, if you have a follow through so quick, I only got in a minute ago at $5, and then you have a stock squeezing to 540s, right? We're talking about 40 cents within 1 minute. You should take some profit. So I didn't do that. You can see You can see it's hitting a wall around that 540s, right? Yes, you do have like short trying to pile on to, you can see that big order over here. Trying to pile on and get out, but at the same time, you're not breaking through the resistance. A lot of times, that shows that, okay, while you have enough buyers and shorts getting squeezed to test that resistance, which is doing, you don't have enough actual more buyers coming in to buy to break through that. So that's where you have a lot, you can see that kind of action, right? So that's where you can see we were just at 540s over here. And then the next second, you're getting a huge rejection. Big seller stepping in. That 540 seller went through. You can see the stock just, sold all the way back down. You can see that rejection is harsh. From 540s down to $5. And you have the inverse of what we talked about earlier. Earlier, you have a skip up. Now it's followed by a skip down. From 540s down to 503. That's a 40-cent skip. And you can see after it did that, I didn't get out. You can see I'm like panicking, trying to get out at 3,000 shares. I was up decently. Now I'm down about unrealized $800. So that's the lesson here. You want to make sure if you are scalping, make sure you're not holding for the moon like I was. So you can see I'm like panicking, trying to get out. When the stock is breaking down after a huge wall of rejection, it's very hard to sell your shares because everyone's panicking and like smashing the bid to get out, right? This is the opposite of what happened earlier when short sellers are taking the ask to get out of the shorts. Now I'm on the long side, I'm smashing the bid to get out of the long. Nobody wants to be left bag holding the stock. So yeah, this is terrible, trying to get out at the bottom of the candle. You can see I got out of it at $4.94. I was up 40 cents, now I'm down, I think 20 cents. Not the best trade, definitely, and I'm definitely embarrassed to show this, but it is what it is. Trading is a lot of greed and fear mixed together, so definitely I got a little bit too greedy, trying to hit like $5.66. Lesson learned. So I did eventually take the short side later on Tupperware, but the trade I really want to talk about is the loss on the long scalp over here. So I ended this trade on the long side down negative $561. And you can see, good thing I got out. The stock is back at lows now, 480s. Not fun. I got out earlier about 490s. So the scalping strategy I just showed you is definitely very useful for part-time traders. You don't have to scale in or add or take so many covers like I do. If you have a smaller account size, you can simply do one entry and one exit. You just have to be more precise. Remember, all you're looking for when you're doing a quick scalping strategy is to get in and get out. Time your entry and take that profit. You need to be happy with small profits slowly adding up. You cannot be looking for a home run using these kind of scalping strategies, whether you're on the long side or the short side. As you just saw for both of these strategies, on the short side on AMSC and the long side on Tupperware, you need a really good read of price action and technical analysis. And I have a video over here that's going to help you a lot with using support and resistance or supply and demand in your trading strategies. It's a simpler and more direct trading concept that's going to help you develop essential skills such as understanding key levels and price action. And I'll see you over there.